Another big name in the news, noted short seller David Einhorn. He and some other short sellers are applying their talents to the European debt crisis. Dominic Chu explains how exactly they're doing this, Dom.
That's right, Betty. Remember, when we talk about shorting government bonds, we talk about this idea of betting against sovereign debt. We've used this term, credit default swaps. They're, in essence, contracts that pay you if bonds go into bankruptcy or default on their payments. That's important here. They're called CDSs. It's the way people have been wagering on declines in European sovereign debt. So we've seen that happen before. Well, David Einhorn and other hedge fund managers are now turning to a more basic way to bet on the declines of these European sovereign bonds, and that is by straight short selling those sovereign bonds. In fact, Greenlight Capital Re, which is an insurance company that's controlled by Einhorn, at the end of June had about $667 million worth of credit default swaps that they've now cut in half and replaced with short sovereign bonds. That's the interesting part about this. They're turning to a more basic way to do this. Now, remember, shorting bonds just involves borrowing the bond and selling it in the open market, hoping that it goes down in price so that you can buy it back for a profit. Now, there is an issue here. There's liquidity concerns. These sovereign bonds don't exactly trade that readily like stocks do. There's not a lot of action in them sometimes, so watch that. And, of course, there are risks in this case here. Einhorn points out a couple of them. Credit events. If governments and regulators are working actively to try to prevent these things from happening. Also, the creditworthiness of banks as well. So, Betty, a very big story here, but something to pay attention to when Einhorn gets involved here.
Definitely an interesting play. Thank you, Dom. Now, still